get a sense of what the markets are doing right now. And the Nifty is absolutely flat, above 24,625. Sensex 2 flat. India wakes up about 2.3%, and Nifty Bank also looking resilient, a 0.3% uptick coming in. Let's address the flash on the bottom of the screen. S&P has upgraded India to triple B from triple B from triple B minus. So that is a big news flow coming in. The markets as of now not penciling in any of this positivity right now. We'll give the rate some time to absorb this news flow and see what happens on this front. We have Madan Sapnavis, Chief Economist at Bank of Baroda, who's joining us on the show. Madan, hi, and thanks so much for your time this afternoon. Good afternoon to you. Please give us your first take and on this development, and how big is this for our economy overall?
Yeah, good afternoon. And I think this is a very big development for us, especially because of the timing of this upgrade. Now, we have always believed that India does deserve a much higher rating. So even triple B, to my mind, is still on the lower side. We should definitely be in the A plus category. But I think this movement from triple B minus to triple B, the reason I say it's a big news for us is that this is the time when we're going through this entire controversy over the tariffs. There are these additional tariffs which are going to be imposed, and there have been different views on how the Indian economy can get affected. Now, the very fact that S&P at this particular point of time is giving any kind of an upgrade to India itself ratifies the strength of the Indian economy. So that is how I look at it. That here we have S&P, which has always been very, very miserly when it comes to upgrades. It has done it for India at a time when we are going through a tough phase. Though lots of us economists, we do believe that the growth story of around 6.5% is something which can be maintained. But that is only the starting point. Even the internals are something which have definitely been appreciated, because S&P also looks a lot at how the government finances are being handled, how the currency is behaving, how inflation is moving. So it looks at a plethora of factors. So definitely it gives a very good signal about the health of the Indian economy.
Sure, Madan. Also want to understand the rationale behind S&P, if you can help us with this upgrade, because they have kept their outlook also stable. Given the way our inflation is trending lower, our macros are looking solid right now in terms of the GDP growth, also that 6.5 figure that you were mentioning right now. Help us understand the rationale that comes behind this upgrade, because while all looks good domestically, globally a lot of headwinds could be headed our way because we still have some tariff uncertainty. Do you believe this upgrade has come at the right time?
No, I think it's come at the right time because this is a very strong message sent to the entire world. Now, could the outlook also have been changed to positive? Yes, it could have been changed to positive, but I think given this uncertainty which is there in the environment and the way in which things could probably move, I think that's why they've been a bit conservative in terms of not changing the outlook to positive. It was ideally any kind of an upgrade like this we have seen from triple B minus to triple B should ideally have also gone with a positive outlook, which would have given us reason to believe that there could be a further upgrade which could be coming. But since it comes after a long time, I think this is something which is very good for not just for India, but also for the markets and also for the outside world, because it's a very strong messaging. That's the way I look at it.
Madan, also help us understand what kind of negotiating power this now gives to India when we go to the negotiating table with the US, with Russia. All of these important meetings are lined up, and we're hearing that a lot of world leaders are going to be meeting each other pretty soon. Give us a sense of what kind of bargaining power or negotiating power this now gives India, and how this affects our cost of borrowing, if at all.
See, if you're talking of the negotiations we're having with other countries, I think the moment you get a ratification from S&P, I think it's very, very timely. So it's very fortuitous that it's been done just before we're going in for negotiations, so that the other country also knows about how we are actually looked at. It's one thing for us to say that we are the best growing economy. That is one thing for India to say. But whether or not we like it, when we have a rating agency, a reputed rating agency actually ratifying it, it actually gives you that much of more room. So I think when any country is talking to us, know very well that this is a country which is economy which is doing very good, and it's not worth actually breaking economic relations with them. So that's the positive thing which comes out. Now, in terms of cost of borrowing, yes, definitely. As far as, see, the Indian government doesn't borrow from overseas markets, so actually it doesn't affect the Indian government's borrowing program. However, a number of companies which are accessing the international market, I think they're the ones who would stand to benefit, because you normally tend to borrow at the sovereign rate plus a premium. So this particular premium at which we are borrowing would definitely come down on account of this upgrade. So I think there is definitely going to be a collateral benefit for Indian companies which are borrowing in overseas markets, because the rating itself gives you that kind of an edge. Now, how significant it will be, it may not be very, very significant, but even something like 5 or 10 basis points on the whole could make a difference at the micro level.
Sure. And Madan, also you did say that this BBB rating, although it's an upgrade, you still feel like this is not justified and we deserve a slightly higher rating. Where do you peg this rating could be? And do you believe this stable outlook is good enough, or do you believe we could be tilting towards the positive outlook in the near future?
No, I think we could definitely be tilting towards a positive outlook. As I said, that BBB, you will have, it's actually a slow climb, because normally you always get upgraded. First, the outlook changes, so then we move to positive, then you probably move to a BBB plus, and then a BBB plus, and then you move towards the A thing. Ideally, if you look at it, I think India could be in the region of around A minus, A, depending upon how things develop. Because if you look at most of the parameters which the rating agencies have been looking at, I think they have been very, very positive all through. So it was something which we felt was not a fair thing being done by rating agencies, keeping it at BBB minus. But this is probably a good baby step, I would say. But we could be expecting more steps, but not immediately, because I'm sure everybody would like to see as to how various countries perform, or how they actually, what the indicators look like, especially after they are through with this entire tariff saga and we know what the final situation is.
All right, but along with that, let me also now welcome Mr. R. Gandhi on the show as well. He's a former RBI Deputy Governor. And Mr. Gandhi, indeed a very positive news flow coming in on India ratings, an upgrade coming in by S&P. How do you see this, and do you believe that it could be one of those re-rating triggers for India as well, which can help inflows into the market as well?
Of course, definitely it is a happy thing that we could get the higher rating. But in my opinion, it was heavily delayed. It should have come much more, because we, based on the fundamentals and the macros that we have been maintaining all this in the recent past, one always expected these kind of ratings upgrades should have come earlier. Anyway, it has come now. That is certainly useful. Both for the corporates who depend upon or who rely on foreign funding, and not only that, now as a borrower, even as an investment country also, many international funds, they also look at the rating before they increase or enter into the market. So that way also we may attract more investment, whether it is FPI or FDI also, based on this additional upgradation in terms of the rating and stable outlook. So that way is definitely a positive feature, and especially in the context that when the tariff-related discussions are going on, there is certain uncertainty people are talking about. This comes kind of support for Indian economy in general. That definitely there will be quite a lot of positive things happening.
Right. And Mr. Gandhi, rightly, like you said, this will also resolve the entire issue of private capex not really picking up. While, some conglomerates did claim that there were green shoots visible, I guess this would resolve and be a step in the right direction as well for more private capex to actually come in.
Certainly, because as I mentioned that there are every type of investor has a particular threshold or hurdle rate which they would want before they enter into a market. So that way BBB becomes a very investable proposition. So that way those interests will certainly be activated, because we have now got this rating.
Okay. Mr. Fadnavis, as well as Mr. Gandhi, just Sabnavis, stay with us. I'm just going to bring on board my reporter, Ankur Mishra, as well, and get in more details on what perhaps the rationale is, Ankur, of this upgrade by S&P.
Yes, perhaps there are four rationales which generally rating agencies keys. One is the robust economic growth. We have seen 6.5% growth, which has been there for India in FY25. And more importantly, if you would have seen even RBI's forecast this time, even for Q1 next financial year, the expectation was 6.6%. So robust economic growth, apart from that, policy and political stability is another reason why rating agencies upgrade these kind of ratings. Another thing is quality of government spending, and what quality is important here. Remember, in the last quarter there were concerns about the spending, but gradually it got picked up, and perhaps that could be the reason why S&P has given this kind of upgrade. Also, commitment to fiscal consolidation and deepening economic reforms are the parameters of why and how the countries are rated. And now S&P has given thumbs up on India on these parameters, and more importantly, the outlook seems stable, and that is much more important in the context of how geopolitical tensions are going on, how tariffs uncertainties are there. But still, India has now got thumbs up from S&P.
Okay, so that's the take coming in. We also have some more lines coming in from S&P, wherein they believe that the effects of US tariffs on Indian economy will be manageable, and they're also saying that the India monetary policy looks more conducive to managing inflation expectation. Mr. Sabnavis, your thoughts on these lines? And we were talking about the tariff impact, but any further thought on that note?
So I think all the boxes that had to be marked have been marked by S&P. I think that is what we're really getting from here. There is the growth story, there is the fiscal consolidation we're looking at. We're also looking in terms of monetary policy, which you have mentioned, because I think the RBI has taken a very nuanced view. So it's not a case of saying that we're just going to keep cutting the rates for the sake of cutting it. I think the message which was sent in the earlier policies, I think that is very clear, that while they would be data dependent, they would be willing to step in, but they would be walking cautiously, knowing very well that a large part of this inflation coming down could be because of the base effects, and things are going to start moving upwards from the fourth quarter onwards and into the next year. So I think when the S&P is looking at any kind of evaluation, they would be looking at all these particular factors. And the way I look at it is that, okay, S&P has done it earlier. If you look at private agencies like JP Morgan and Bloomberg, including Indian bonds in the indices, that itself was an indication of how well the Indian economy was doing. While we may not technically be a developed economy because of the per capita income mark, but the fact that we have been included in these indices earlier itself, 1.5 years back, I think that itself was a very positive sign. And it was only timely that appropriate that S&P had to do a similar thing. So I'll go back to saying that the timing is very much important, because this is the time where we can actually go with our heads up, saying that the Indian economy is one of the brightest sparks today. And from what you have put out, S&P also believes that we'll be able to tide over this tariff issue, because I think among all the countries, I think India and Brazil are the ones which have been singled out with higher tariffs. The fact that it's saying that the growth story is not going to be impacted significantly in this entire tariff issue is a very big positive for us.
All right, indeed a very big positive coming in. But Mr. Gandhi, I also wanted to understand that given that India continues to be one of those fastest developing nations, and along with that, we also have our fiscal deficit in control. Given this scenario, do you believe that there could be a further case that in the next 2 to 3 years, given the strong standing position of our fundamentals, there could be a case wherein a further re-rating could be on the cards?
Yeah, that's what I mentioned earlier also. Even in this upgradation, we had expected much earlier. So that we have further consolidated on all fronts, as just now Madan also did mention quite a bit about it is not just the growth rate, fiscal prudence, monetary policy effectiveness, and then current account deficit kept under tight control, and foreign interest continuously being there. So overall, in every type of macro and other features, we are ticking the boxes very correctly. That would mean that we should be getting further upgrades. But as we all know, the rating agencies are very quick when they do downward rating, but upward rating, it definitely takes a longer time because it looks like they want greater assurance again and again, reinforced assurance that things are sustainable. That they know that the upgradation will take time, but it is due, in my opinion. It should be coming soon. Anyway, it is all in the hands of rating agencies.
All right, one important information which is coming in from S&P upgrade is about the mentioning of US is India's largest trading partner, but do not expect even 50% tariffs to impact India much. That is the rationale which has been put forward by S&P in the upgrade which has been given. So, Mr. R. Gandhi, I want to understand from you, when I asked a question to RBI Governor during the press conference, I asked about the aspiration of the growth. Now you think even this upgrade coming, do you think we can move little closer towards 7% in the current financial year?
No, there is no such a direct relationship with a causal effect because the upgrade we have will be having higher growth. Higher growth, the reasons are much different, not because of rating. That depends upon investment that is going to take place in the economy, whether it is a private investment or public investment, consumption growth, agriculture growth, so many factors coming. Yes, certainly the aspirations are there to have strong growth because everyone definitely wish that by we turn 100, we become a developed nation. That is the aspiration. So the work towards that is a continuous process over these next 20 years plus. That way, yes, one would always want to grow higher. Now that we have been clocking at 6.5 for the past several years, we should definitely be thinking about reaching 7+ in the next 5 years and continuously to increase further.
Mr. Sabnavis, I want to come to you regarding the aspiration of growth part. Although the projections do not have direct correlations, but as far as the money which is coming in India, how much do you think that will have an impact after this upgrade, and moreover other rating agencies will take a cue?
See, in terms of more funds coming in, yes, we do expect it, but we should also remember that in these uncertain times, we cannot expect anything to happen immediately in the next couple of months. So I think it's going to be a slow process because you see a number of investors do have a mandate saying that you can only invest in certain kind of rated countries. So I think what was holding them back at BBB minus is something which would probably turn positive. But these are kind of benefits which we'll get only during the course of the year. And see, let's accept one fact that with the kind of uncertainty we're having about these tariffs, how it could be affecting growth of various nations, I think the foreign investors would also be a bit cautious about where to put their money. Now, the kind of pressure which is being put on the Federal Reserve to lower the rates, if at all they do it in a rapid manner, then automatically we can see that investing in other countries could become more viable from the point of view of investors. And we could be expecting something to come in the next 3-4 months. But it's going to be a slow process. Now, whether this is going to make other rating agencies upgrade, I'm sure they will take note of this particular development. So I think everybody has their own methodologies to arrive at whether they should be changing the view or whether they should be changing their rating. But this will definitely be considered by also Moody's and Fitch. I'm quite sure they will do it because this is a major change. And as what was mentioned by Mr. Gandhi, all these things are very, very sticky. It takes very long time for them to change. So even now changing to taking a positive, giving a positive outlook, that would also probably take a year or two. And then moving to the next level could take more. And all this time, it's a case of testing the economies, their models as to whether the economies are actually going in the right direction. So I think the strong policies which we have had along with the revealed growth numbers, I think that has actually been the ultimate vindication of this particular upgrade which we have seen today.
Absolutely, and here's more to follow, like both the gentlemen today said. But Mr. Sabnavis, Mr. Gandhi, thank you so much for your time, and glad that you could join in with your take on the big S&P upgrade. But on that note, we're going to take a very quick break. What are the markets doing? We flattened out completely. It's been a little bit of a choppy ride, but one would say it's been largely sideways. Those jagged edges don't mean a whole lot because it's been a very narrow band from the high to the low of the day. So right now, we're beginning to inch up once again ahead of the long weekend, and a very important one at that. Why so? We'll discuss all of that, but after this very short break. Today, so while some sectors are still weighing heavy, like oil and gas, telecom sectors, even metals for that matter, in fact, they're the key pressure point today. Look at it, Tata Steel, that's down 3.5%. You've got a JSW Steel, which is down by about 1.5%. You've got a Hindalco as well, which is lower in trade. But then there are pockets of strength as well in the market. And IT has been consistently one such case in point. Of course, it's debatable whether this is just a tactical move or is there a material, move of flows that you're seeing towards IT. But Wipro, Infosys, these are stocks once again which are propping up on the screen. SBI, ICICI Bank, Eternal holding very strong. These are all looking good, and HDFC Life as well continues in its pole positions. So sectorally, you would have to say technology, automobiles are the ones which are chugging along nicely, other than select banks as well. But Dhananjay Sinha too joins in on the show to talk about what he's making of the market right now. Dhananjay, now pretty much at the end of the earnings season, right? What's the takeaway? Which are the biggest overweights and underweights after the reading from the earnings this time?
I think it's quite a difficult call at this juncture. If you look at the overall performance of the Indian companies, this quarter has been a very modest growth. It's low single-digit growth overall, and we are seeing a sort of a tepid performance across consumer goods. Even I would say even banking sector. Large components. If you look at chemicals and I would say even autos and stuff. So I think there has been a sort of a headwind as far as the overall performance is concerned. Margins have been under pressure. Sales growth of companies or non-finance companies and manufacturing sector has been very low. I think that is the broader context of the performance this quarter. And I think this is the first quarter when you saw the effect of the tariff imposition by the US, and that was only an average of 10%. So that was kind of seen in this quarter. And it also shows that the impact is much larger than what people think. So I think that is broadly what it is. As far as the markets are concerned, I think there has been a good amount of rotation and all that's been happening. People were looking at consumption themes, revival in rural, etc. The commentary from consumer companies, some consumer companies, being that urban is also showing some evidence of revival, etc., or at least people are hoping for such revival. As far as the banking sector is concerned, people relied a lot on other incomes to shore up their profits, but we had the pressure on margins continuing. So all those things were there. I think we'll need to really be very nuanced in terms of our positioning. At this juncture, people are looking at IT sector, which has actually seen a significant correction. It has also shown a fairly tepid growth as far as overall top line is concerned. But with the valuations coming down there, people are sort of looking at that. Within the auto space, there is some traction in two-wheelers, etc., that's holding up relatively better than passenger vehicles. So I think that is one segment. Within the consumer space, I think people are looking selectively because, you look at large heavyweights such as large companies such as HUL, and others, which have actually, page industry, etc., or other discretionary consumption items have seen a certain amount of pricing pressure. So I think, we can look at selective companies over there. So that is there. I would say there is in pharma, people are looking at the fact that it is avoiding the tarification at this juncture. So that is one segment. I think agri companies have done generally better. So I think that's another segment. So broadly, I think the uncertainty is very much there. The people are looking at sector rotation, and I think every month, I think this can actually change. The views can change, sectoral overweight, underweights can change.
That's the sectoral call coming in by Dhananjay. But with this, let me also welcome Arpit Beriwal as well as Sharan Ninane on the show. Very good afternoon to both of you. And Arpit, let me come to you first, because before we head towards that long weekend, what we are seeing is that the markets are also in a bit of a wait and watch mode, because since the start of the day, Nifty 50 seem to be consolidating, a bit of an outperformance for Nifty Bank. Where do you believe that the markets can shut shop today, given that we also have that weekly expiry?
So very good afternoon to all. If we talk about Nifty first, so after almost relentless selling of last 6 weeks, this week has been relatively better. We have seen some recovery from the lower levels, and talking about Nifty, so relatively you have seen outperformance this week so far. So looking at the chart structure wise, definitely as per the weekly closing, we are expecting Nifty to close near around 24,650 levels. That is also it's trading above its VWAP level. Closing about 24,650 will definitely pause in negativity from last 6 weeks. Talking about Bank Nifty, relatively, we've seen a very range-bound move in Bank Nifty from last 4 to 5 sessions between 55,000 to 55,600 zones. Relatively, today it's outperforming, but a closing above 55,555 would definitely set the next leg of momentum. And in the meantime, we're expecting a range-bound move, but definitely on the weekly charts, Nifty and Bank Nifty both are closing on the positive side, bullish candle. So definitely, we can see some momentum next week if we see a follow-up buying going forward in Nifty and Bank Nifty both.
Okay, so that's the take on the markets. Sharan, give us a sense of the moves you're seeing on the entire oil and gas space. Of course, given that tomorrow is that Trump and Putin meeting, we could maybe hear something on the India-Russia oil trade and any discussions on that front. Do you believe the market is already penciling in some negativity here? Because if you take a look at the likes of HPCL, IOC, BPC, HPCL is down 4%. How are some of these stocks shaping up on the charts?
So, Snehi, I think that is more to do with, I think there can be petrol and diesel price cuts. I mentioned it in the morning only. So maybe on that front, I think more or less they are reacting this HPCL, BPCL, IOC. I think day before, if you remember, I gave a short call on Oil India. Well, I think this sector is the main reason why this whole tariff situation has gone from 25 to 50%. So again, it's too early to take a call. Maybe it's just their first meeting of Trump and Putin, and they follow up with another meeting in the coming week also. So we'll have to wait and watch. And looking at the Nifty, again, so flat since morning. I don't think anyone wants to take a position on either side, neither on the short side, neither on the long side. So looking at the market to even talk about oil and gas sector, which is the main reason for this whole issue, I think it's too early. We'll have to wait and see what happens over the weekend.
Indeed. Just looking at some of the active movers, and metals clearly is that one pocket which is under pressure, but that's not quite the case with IT. And look at what's happening within the broader end of the market. While it still continues to favor the declines, and you've got a counter 140 standing to the declines, but look at a Muthoot Finance, for instance. That's scaling higher still by about almost 10%. Manappuram is looking very smart with a 4% dash up. You've got Kalyan Jewellers as well, which is also holding higher by 4% as we speak. And then, of course, you know, names like Naukri or erstwhile InfoEdge, Uno Minda, these are all stocks which are holding out very, very smartly within the liquid universe. Arpit, what is your sense on how some of these gold financiers should be looked at? The earnings, of course, have been very smart, but a Muthoot and Manappuram, for instance, what's your call here?
So generally, if you see, we have seen a very secular rally from last couple of months in the finance companies. However, in last couple of weeks, if we talk about the chart section of Muthoot Finance particularly, the stock was in strong uptrend, and last 4 to 5 weeks, the stock was trending downwards. However, post the result, the stock is again back to its life high. So looking at the primary trend, the stock in strong uptrend, and after almost a consolidation breakout, after almost 6 to 7 weeks trading above 2670 levels, definitely the stock can head further towards 2850, 3000 plus levels positionally. So I think setup wise, Muthoot Finance is very strong, and definitely post here also we can see more upside towards 2850, 3000 levels with major support around 2650 zones.
All right, so that's about Muthoot Finance. But today we also spoke with the management himself, George Alexander Muthoot, MD of the company, talks about their loan growth business outlook going ahead. He also adds that the non-gold loan business to be 15% of their portfolio in the next 2 years. Let's go across and listen in.
Going forward, we would like to do our gold loan business, focus more on the gold loan business, and side by side gain traction on the non-gold loan also, especially the home finance, where we have actually invested. The board has decided to invest another 200 crores in share capital in the home finance. So probably going forward in the next 2 years or so, we should see the non-gold loan portfolio reaching about 50%, 15%. Today it's about 11% only. But our main focus always will be the gold loan sector. Going forward, our steady state yield should be in the range of 18.5%, and our spread should be in the region of 9.5%. So we'll continue to do that. NIM should be in the range of 11.25, 11.3.
Coming in from the management of Muthoot Finance, that stock is higher by about 10% and continues to hold on to all of those gains it has seen post a very strong Q1 numbers coming in. But time now to get in some BTST ideas from our techies. And Sharan, you go first. What's looking good right now and where are you placing your bets?
So I think, Sneh, if anyone wants to buy or even sell today, I think they should first understand Monday will be a very volatile day. So before doing anything, please understand your risks and then only take the trade. I think two counters are looking quite decent today, if at all anyone wants to trade. First is United Spirits. I think it's looking decent. It's shown some kind of reversal from the bottom. It's trying to reclaim its 20-day EMA. So I think it's a good bet if you want to do a BTST, buy today and sell on Monday on United Spirits. 1320 is the current price about. So a stop loss of just around 40 rupees, 1280, and a target of 1360. Second, Indian Hotels. I think in a shorter time frame, it's given a breakout of a descending trend line. In the last 3-4 sessions, it's shown good uptrend. And I think it's if it continues its momentum, it can actually go to that 800 odd level. So United Spirits, again, it's a BTST trade. So buy at 770 odd level. Your stop loss should be 760 and your target should be 780 to 790.
Well, United Spirits, Indian Hotels, Sharan surely is gearing up for the long weekend, aren't you, Sharan, already? Okay, then Ajay, I'm going to throw in one more name, Interglobe Aviation then. I think it's made a fresh high also today, but then... I mean, you know, what's a fair value really for some of these stocks which are leaders, marquee in their sectors, and what's a good price to pay? What's your thought?
So the thing is that you know the traction in the aviation space continues to be good. I would say the volume growth, the travel numbers are actually aviation numbers are pretty good, I think, and they have the pricing power and all. I think we also have a sort of a tailwind with respect to a softening in the crude prices that has happened in the recent months. So I think all those things are adding to the margins and stuff. So I think, and of course they have a sort of a near monopoly kind of a scenario. So I would say in this sector can continue to see good traction. I think, I mean, and in the context where most of the other sectors are seeing sort of a headwinds, I think these are certain pockets where investors can see, earnings consistency. I think that is why the market might be looking at this company in a positive way.
Right. Okay, Dhananjay, thanks for your time. Good to be speaking with you today. But Arpit, any stock ideas that you may have before we wind down for the week?
So looking at the overall market, specifically selective pockets are still looking good. So from the new age company, Eternal. So if you look at the chart structure on the monthly and the weekly setup, it's very strong. Today we have seen a fresh range breakout on the daily scale above 314 levels. Trading a life-high trade, so definitely we can see more momentum towards 330, 335 levels. So Eternal would be a first pick with keeping stop loss of 305 for an upside move towards 333. Second would be from the aviation space, Indigo. So as we already discussed about, it made a fresh life high. So a very strong counter across the sector. Weekly range breakout above 5950, and definitely we can see good uptake in coming week. So the Indigo we can go long with keeping stop loss of 5870 for an upside move towards 6250 levels for the coming week.
All right, so that's about Indigo as well as Eternal. Both the counters are at life high levels, and Arpit does believe that more upside could be in the making. But with this, viewers, it's time now to slip into a very short break. Don't go anywhere. We'll be right back after this quick break.
in association with SBI. Be alert, be scan safe.
यूं ही नहीं ताज ताज बन जाता है, शिल्पकारों का हुनर और चुनिंदा संगमरमर ताज को नायाब बनाते हैं। कुछ ऐसे ही चुनिंदा जगहों से बस खास ही चुनकर लाता हूँ। कतरे कतरे को मैं हीरे सा परखता हूँ, कभी कोई समझौता नहीं करता हूँ। यूं ही नहीं मैं रजनीगंधा बन जाता हूँ।
सर इन्हें क्रिप्टो करके लाइफ सेट करनी है, पर कॉन्फिडेंस नहीं है।
कॉन्फिडेंस चाहिए?
हाँ सर।
डिफ्यूज द बॉम्ब। ऑल द बेस्ट। डर लग रहा है? नहीं आता तो हलवाई है। कैप्टन, इन्होंने सीखा है इसलिए ये कॉन्फिडेंट है। अगर आपको क्रिप्टो में कॉन्फिडेंस चाहिए तो क्रिप्टो सीखना होगा। क्रिप्टो कोच, CoinDCX, लर्न करो, क्रिप्टो करो।
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
तूने ये देखकर पैसे लगाए? अरे नए प्रोजेक्ट में इन्वेस्टमेंट करने से पहले करना होता है होमवर्क। हाँ। इसने एक्सपर्ट एडवाइस भी अपने दोस्तों से ली होगी।
पापा ये
1 मिनट, एक गलत फैसला लाइफ बदल सकता है।
इम्प्रेसिव, हाँ?
कैसे? सारे ऑप्शंस देखे, रिसर्च भी की और एक्सपर्ट एडवाइस भी ली। मैजिक ब्रिक्स का मैजिक होम्स, नए प्रोजेक्ट्स का एनसाइक्लोपीडिया। पापा, एक सही फैसला भी लाइफ बदल सकता है।
मैजिक ब्रिक्स, पता बदलो, लाइफ बदलो।
दादू ये कौन सा प्लांट है?
टैंजरीन, बहुत मीठा होता है, तोड़ना नहीं है।
फ्री फॉरेन ट्रिप, क्लिक ऑन द लिंक। अभी करता हूँ।
दादू रुको, लिंक में क्लिक मत करना।
क्यों?
ये SMS स्कैम है, क्लिक करोगे तो आपके बैंक डिटेल्स होंगे चोरी।
ओह, थैंक्स गप्पू, बचा लिया। ये ले तेरी समझदारी का फल।
RBI कहता है स्मार्ट बनो, कूल रहो।
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी क्लब प्राइम, रहो बेफिक्र।
Promise me you'll find your way home. Promise.
What do we have here?
I am Furiosa! If you find him, he's mine. My childhood. My mother. I want them back. I want them back.
To make it epic.
Furiosa, a Mad Max saga. 31st August, Sunday at 8:45. Only on Movies Now and Movies Now HD.
Back with closing trades right here in ET now. Let's just revisit what the closing trades for the week are settling in at. 22 points low on the Nifty futures, not much of a move. In fact, if you just read through how the range has been today, it's been pretty narrow actually from the high to the low of the day. We're closing in pretty quiet ahead of this not just long weekend, but very big weekend as well. Well, let's take the conversation forward. We've got Sudeep Bandyopadhyay as well joining in on the show right now. Sudeep, hi, good afternoon. Good to have you on the show. And critical weekend, you've got, Putin as well as Trump meeting in Alaska over the weekend. But that aside, Sudeep, I guess, the signs for India seem to be spelling good. Just now, you had an S&P upgrade as well coming in.
Well, absolutely right. I think... apart from the Putin-Trump meeting, which has got a lot of uncertainties around it, and one doesn't know which way it will go, whether it will be good for India or, good for anybody else, one has to see. But this S&P upgrade is a definite positive for India. It was long overdue, of course. But again, it coming at this point of time is definitely a positive remark on India's macroeconomic factors and the stability which Indian macroeconomic policies, fiscal policies, monetary policies have brought into the economy. So it's an acknowledgement, and I'm sure it will help India overall. Of course, the external borrowing should become cheaper, and domestic bond market has already started reacting. It should. and I think it's overall very good. Also, I must add to the mix. We are expecting a lot of things from Prime Minister's speech tomorrow, and there can be multiple things which the government may wish to do to ensure that this tariff-related uncertainty and probable slowdown because of the high tariff in USA can be taken care of through certain measures. Probably it's a little premature to expect that to be announced tomorrow, but the expectations nonetheless are building up. So let's wait and watch. And you're absolutely right. It's not only a long weekend, it's a big weekend and an important weekend.
Already getting good feelers. Commerce Secretary is saying that they're fully engaged with the US on trade negotiations, and we've already signed an FTA with Oman as well. So things at least seem to be building up on the upside. But today what we have in our hand has been the earnings season. What's been your read through? Any big earning surprises that you felt are have good visibility, the valuation comfort as well is visible, and something that you say that, let's sell or completely avoid right now after what you've seen through in the earnings?
Well, I think, if you have to say complete avoid, I would still go to those sectors which are exporting to US. I think a lot of uncertainty, and I personally believe that the uncertainty is not going to end one way or the other on 15th or 16th or anywhere in the next month. It will continue for the foreseeable future. So it is better to avoid sectors which are predominantly exporting to US or have a large US business component. You should focus on sectors which are domestic oriented and have majority of the earnings and revenue coming out of domestic markets. In that matter, I've been positive on cement. I think the earnings were pretty good, and one can look definitely at cement on the back of the fact that demand is becoming stronger and stronger. Cost efficiencies have been significantly enhanced, and naturally the margin is improving with pricing power coming back to the industry. So this is one segment which I believe should do well in the foreseeable future. The other segment where I'm hopeful is consumption. I think things should start looking up from maybe from the next month itself. The festive season is starting now in this month, and I think it'll gather momentum. Monsoon has been good. Consumption demand will pick up. The exemption or the relief given in the budget will in some form or the other will reflect in the consumer durable demand going forward. So overall, one has to look at sector, I think consumer durable as well as FMCG can be looked at. I'm not saying this is cheap or anything. The sector is reasonably priced, but still there are opportunities and possibility of growth. The last but not the least I would mention is, one did not completely discount these, EMS players. There are a lot of pulls and pushes, and the valuation is not cheap, definitely. But one needs to look at this entire India-China negotiation, which is opening up a lot of opportunities, and I'm sure there will be further opportunities. So this space needs to be watched. No need to go and buy straight away, but this definitely needs attention.
All right, so those are some of the sectors that Sudeep is liking at this point in time. But as we head towards the long weekend, one of the other companies to watch out for will be M&M, because as they have been flagging off through their social media pages, is that on 15th of August, the company has an event where they are likely to unveil a new platform and some of the other announcements as well, which are still under wraps. But Sharan, just wanted to have a chart check on this one, because like we have been talking about the autos, but M&M, especially in the last couple of weeks, haven't participated that big in terms of the stock price movement. But do you believe that the stock is at a very interesting point right now and one should really look at only on the technical aspect? Sharan, this question is for you. I guess you have to unmute yourself.
Yeah, if I'm not mistaken, I think the stock has actually hit a new all-time high today, and I think it's corrected a little bit. I think it's on my radar since a very long time, and I think just before their new launch, I think the stock has been showing some kind of traction. Back-to-back 4 days of green candles. I think a little bit of selling today, maybe on back of the volatility that we're expecting on Monday. But again, looking very good on the charts, technically speaking. It's a buy on dips at all levels. I think even if it comes to 3,100 odd levels, you have to buy this stock. I'm very positive on their four-wheeler SUVs and EV part of the business. And I think looking at the festive season going ahead, you can expect some very good quarterly results on the fundamental side also. In terms of technical, I think if it continues this kind of rally and starts trading about the 3,300 odd level, you can quickly see 34 and even 3,500 odd prices coming in the next 2 or 3 months. So technically very strong, new all-time high today. Fundamentally also next 2-3 quarters are going to be very good for the company.
You know, Sudeep, that's the thing. That quality is not coming down. And largely you're seeing the entire premiumization, urban consumption theme. I mean, look at an Interglobe, it's hit a fresh high today. Look at an Eternal, that's hit a fresh high today. Indian Hotels, steady as it may be. M&M, you know, all these stories, you never get to buy the stocks cheap.
Right, to an extent. But I'll tell you, M&M we have been, recommending for a very long time. So that one I must confess that we have been a supporter of M&M for a very long time. Look, if you look at consumption, I think I was just talking about consumer durables and FMCG. You can add to that basket, these premiumization stories, whether it's a Nykaa, whether it's a, even for that matter, many of these automobile companies, I think that's a good story, definitely. Premiumization definitely is the way to go. As far as these kind of consumption stories are concerned, there is distinct demand. But having said that, some of these platform companies, because you mentioned Eternal, they are doing the right thing. In fact, as opposed to focusing completely on the bottom line, they're looking at expanding the market share. Revenue is what they're focusing on. They're trying to ensure that the costs are under control. And for that matter, Eternal has been doing, ticking all the boxes. And these platform businesses, I think winner takes all is generally the way the businesses go. So gaining more and more market share and becoming more and more dominant is definitely the way to go. I will add PB FinTech to that. I think that's another business which is which has done quite a lot of good things. In between there was some unrelated diversification into healthcare, but management has clarified that enough, and the underlying business is strong, robust, and growing rapidly.
But, Sudeep, again, all these stocks pretty much are scaling at their all-time peaks. Do you go via the Swiggy way, the bottom-up story in this case, or do you think that's also run up quite a fair bit?
No, I just mentioned winner takes all. That's my belief in these kind of platform businesses. So if I have to buy one stock in that space, I will go definitely for Eternal.
Okay, Eternal looking good over there. Winner takes all. That's the strategy, and seems like some of these stocks that are market leaders in their individual categories, fresh highs coming in back to back for some of these stocks. So seems like there's no stopping, at least for now. But Arpit, give us a quick chart check on some of these stocks that Sudeep mentioned, and one that he mentioned that stood out was Nykaa on the whole premiumization consumption trend in the whole BPC category. Nykaa came out with its numbers day before yesterday, and so did Honasa Consumer. Honasa, excellent set of numbers. Nykaa also not all that bad. In fact, segmentally also quite strong. How are both of these stocks shaping up on the charts, and which one offers better value purely on the technicals?
So looking at the overall theme as a whole, if we say these two counters has underperformed significantly. So first talk about Nykaa as a whole. If you look at the monthly chart setup, the stock is from a base around 160, 170 levels, and slowly, steadily it's back to its previous hurdle zone near 225, 230 levels. So I think chart setup wise, Nykaa is near some major make or break level around 220, 225 levels, and any closing above 220, 225 will definitely can see some uptick towards 235, 250 levels. If we compare with Honasa, relatively, if we see the chart structure of Honasa, relatively the stock structure is still weak, and we have seen some jump from the lower levels, but as compared to the chart structure between Nykaa and Honasa, definitely Nykaa relatively offers a better opportunity. But we have to keep one thing in mind, that as we are bottom fishing, so we have to keep strict stop losses. So Nykaa would be a preferred pick with a major support around 200 levels. Nykaa can see a good move towards 225, 240 originally in 1 to 2 months perspective.
Okay, Arpit, good to have you on the show. Sharon, we'll let you go on that note as well. And Sudeep, good speaking with you as always. Let me wind up for the day. And while we're closing quiet on the index, there's been a lot of stock-specific action. So I'm going to hand it over to Ashesha for the closing trades.
Well, yes, a whole host of individual stocks were buzzing in trade.